Okay, so basically on today's topic on the whole issue surrounding fintech, I think I'm just going to delve into it. The shorter the time we take, I think the better for all of us, so we can give time for people to ask questions and the likes. So with the topic of today, I would want us just to look at the whole fintech arena from a global perspective, okay? And I would want us, before going into the key topic, into the key questions surrounding it, that we think of fintech as a baby coming from frugal innovation, okay? Where people actually sat down and thought through ideas and things in a way that nobody it was birthed, okay? So from this general and global perspective now, given that this is a new thing, it's a new, let me call it, market that people are trying to create a product for to address issues with regards to financial inclusion more so, if we narrow it again now to the Kenyan scenario and probably to South Africa, where I will want us to do a comparative analysis of the two. I had a bit of some problem with my presentation because I had it saved on top here with me, but I have the key points. So, and I'm going to narrow it down to Kenya and to South Africa, where we're going to do a good comparative analysis between the fintech ecosystem in the Kenyan perspective and the South African perspective. And the reason I try to look at this from these two perspectives is that in Kenya, we are dwelling more on the mobile payments and the mobile banking and looking at it from that arena and from that development perspective. Whereas in the South African bit of it, we are looking at South Africa being a country where most of the models tend to be more Europeanized, more European focused like, and the banking system is very strong. So when you look at fintech innovation from the Kenyan perspective, you find these, I call them digital natives. That's the word I would probably use, which is a word also used by an author called Alex Ross on his book called Industries of the Future. I would advise anybody who wants to understand the whole global industry perspective from the eyes of a person who was actually involved in projects to read that book. It's called Industries of the Future. And when we look at Kenya, we are wowed by the whole digital natives and the adaptation of technology from a curiosity perspective and trying to get, let me call it, shortcuts in how they operate things, because they want things done in a quick and effective and efficient way. Whereas when we look at South Africa, we look at the difficulties that the same thing that happened in Kenya had going into South Africa. Why? Because in South Africa, there was this whole developed market in terms of many people having access to banks and all those kind of things, given that it tends to be a bit more advanced in comparison to Kenya and in terms of the banking sector. So you find that the difficulties they had penetrating in the market, if you look at the case studies, even from Safaricom, that I think this is a good way for us. Africa, the reason the penetration of fintech into their markets was a bit difficult, more so with the mobile payments and the mobile banking, was because there was already a properly established banking system which accommodated people at all different levels. Whereas in Kenya, you find that we had this market where many people found it difficult, like, to assimilate the normal mwananchi, like the common person, into the banking system. If you didn't have a lot of money, people saw you as a dangerous stakeholder to work with or deal with. So from this whole thing, we are able to understand that fintech is a lot to do with financial inclusion, although we have other branches of fintech, like the likes of InsurTech, you have other specialized fintechs. We are not going to delve into all of them, but we are also going to look at cryptocurrencies, which is now like gaining traction and momentum in the global arena, given that it's trying to show its agility, it's trying to show how it can compete in the, let me call it, in the market as a strong currency, which has no influence from government and its way of implementation and doing in different countries and different continents is still being developed, if you think about it. And if you think also about the South African scenario and the Kenyan scenario that I'm giving, in South Africa, you find the laws and regulations tend to be a bit harsh on this whole thing regarding the cryptocurrencies. So you find that governments sometimes give warnings to their people on how to use, like, they give warnings in the sense that some cryptocurrencies are not being allowed into the mainstream or the government sector in using it to pay for things. You know, in Kenya, you see cryptocurrencies is being accepted because, as you know, the legal framework in Kenya tends to go with the developments that are happening. So you find, for example, when the M-Pesa thing came in, there were many banking systems that tended to let me look for the right word. Like the banking system came forward against M-Pesa. Why? Because for them, they felt like it was a banking system, but they didn't look at it from a money transfer perspective. Okay, so when they came in, these people had already been prepared, like the legal team from this FinTech, because I talk about it because it's the largest in sub-Saharan Africa, and it has engaged a lot of money in terms of research and development, litigation, all those mitigation of law-related factors, and they've brought in experts with this. So when you're looking at FinTech from this holistic perspective, you think of it from a litigation point of view, from an implementation point of view, from an acceptance point of view, because again, you don't want to be the person pushing a new innovation or a frugal innovation into a market that you're not sure you're not sure how they will receive the actual product. So there was a lot that went into research and development, and this has played a key into why FinTech and the demand for this digital transactions skyrocketed. And then probably still on the introduction, narrowing it down to why now people understand FinTech as a need as compared to an extra. You think of the COVID situation and how the whole trends that emerged surrounding the COVID situation, people were no longer feeling confident enough to transact using the solid cash, you know, like the solid cash. People moved now, like the whole service showed us that it was a need that we took for granted initially, because now you were supposed to do the digital much contact as possible. It was just helping the society in a way, in a way that people did not expect it to play, because everyone was thinking about COVID situation in terms of the healthcare sector, all those things. But then there were these other daily, day-to-day, let me call them operational activities that people did that did not understand the need or the use of until the COVID situation came. So I feel like with the COVID situation, it accelerated more into the whole scenario of neo-banking. With the neo-banking, you're thinking about digital banking services under this, because they still fall under the FinTech, where people now started being more lenient towards doing the digital services online, withdrawing money, transfers of money from mobile to bank, from bank to the, let me call them cards, basically the Visa cards, the credit cards, like everything was moving towards contactless. And the only way that was made possible is because of the already developed, let me call it FinTech infrastructure in specific countries, okay? So if you look at the scenario with regards now to the COVID situation, you understand that FinTech was way ahead of its time, okay? It came before, and by the time now we were understanding its benefits and the use, it was during a pandemic time. Why? Because now people understood the importance of just owning a mobile phone, the importance of being up to date with these FinTech related services and technologies. Many people took their time now during the FinTech, during the COVID time, to learn and to understand. I think I see a comment there.
Yeah, but your network became better, so that's okay. So you can carry on. Although before you do, which I have several questions based on the what you've discussed so far. So you've mentioned aspects of how implications of now the fintech has on Africa. So we see a scenario whereby you've said Kenya and South Africa have different views of the same. So Kenya has accepted it while South Africa is having more regulations on the same. But then now looking at it from a governmental point of view. So what are the implications of Africans joining or investing more into now the digital currency and fintech in general, depending on how our economic standards are as Kenyans? Because we can't compare with Western countries because their economic bandwidth, depending as based as ours, are two different things. So now, what are the implications of us diving into fintech, for instance, as Africans, especially on our economy? Will it be a boost or will it actually have negative impacts on the same?
Okay, so let me look at this from a study perspective. There was a study that was performed by, if I recall, by UK Aid, and I can't remember, but I'm gonna share with you. And it was looking at the benefits of using M-Pesa more so and M-Shwari, and it was also looking at something called M-Kopasola. Okay, because as a result of having the fintech services, you were able to have other services that were, for example, the M-Copper solar services came as it's a pay-as-you-go service where you procure a solar system with 2 lamps and a set where you're able to charge your telephone and all those kind of things. And what happens is you give people access to renewable energy, but they use the fintech, that is the mobile SIM card, to pay for these services until they can own this asset and they can start using it to generate electricity for their homesteads as well as the surroundings. So you find small businesses have come up as a result. So from this perspective, you see that with the building of the ecosystem of fintech generally, you are able to have other sub-services that banked or used the model that had already been created by the main fintech services to build their business idea. So there was this whole thing of skill share, okay? One opportunity presents another opportunity, and then you have a domino based on the main financial inclusion that is now the mobile services, the provider. Then on this other perspective, the economic related benefits with fintech. During the COVID-19 situation with regards, let me use the example of Kenya, you find many people went out of their way to borrow money, okay? So it was giving people access to credit, but through the main ecosystem whereby you find other, let me call them other companies coming up, creditors who are willing to give out loans. So you will have to register with your mobile number, and then you get access to credits. Look at M-Shwari, for example. They were able to develop now the whole ecosystem of money lending platform using the fintech already created platform from M-Pesa. What happens is you realize that many people wanted to have access to credit, and because this amount of money are very minute and very small, and if you were to go to a banking sector or a financial institute to ask for this money, they will brush you off, okay? So what happened is many small, let me call them small scale traders, or even the normal persons who would want a quick access to a loan to just buy something, had an avenue where they would get access to loans in a quick, efficient, and effective way without necessarily filling in lots of documents, okay? So we're looking at the young millennials, as well as people from the village, as well as these people who do not have access to banks because they have to travel many kilometers to get to a bank just to withdraw a small amount of money. So if you do the cost-benefit analysis of using this fintech platform to what they would have gone through to get this amount of money, which they probably need so much, to do their day-to-day activities, you see the benefit from that angle. On the other hand, what FinTech has introduced is the importance of doing a due diligence when implementing a project, okay? And the importance of research and development. Because, for example, when we are talking about FinTech, we look at different theories and technology transfer models, okay? So you realize if a friend is using a certain product and they like it, the possibility of them, the possibility of their friends and circle of friends using the same product is very high. Why? Because it's based on word of mouth. So from one person to another. So you find the network keeps improving, it keeps expanding, and the more it expands, the more they improve the services. So you find as a result, they've had to employ many people. Think of it, how many ATM, let me call it teller machines do we have in Kenya? Probably around 200. No, I'm not sure of the exact number, but I think they're less, around 3,000 if I'm not wrong. I stand to be corrected. But think of how many M-Pesa agents we have in the country. Many. So what does that tell you? It tells you that it has managed to create employment where nobody saw opportunities in employment. Secondly, it has created small mini businesses within the same thing. Why? Because these people, in as much as they are not considered employees of M-Pesa per se, they are able to have many different products in their small kiosks. So this person is able to juggle many different jobs. And this is where now you compare to how things are done abroad. Many people will have like 3 jobs at the same time. So it's more or less bringing this concept unconsciously to the people. If you ask someone, they have an M-Pesa agent, they are doing Airtel agency, they are doing Equitel. So you find all these things are done by one person. So it's like multiple streams of income, which are small, but at the end, they end up to be a huge sum of money. So if you think about it, other benefits is that it's opened up people to see technology as a way of making money, not just as a way of consuming the product, but as these are some of the implications. Now on the cryptocurrencies, let's talk about trust. You know, even in the financial statements, when you're looking at it, there's always the point where you talk about reputation and you're talking about goodwill computation, okay? So when you look at this from a perspective of goodwill, is how many people are willing to risk into these cryptocurrencies. If we look at the African scenario, many people still don't have confidence. Why? Because we lack, let me call it civic education on making people aware of this product. Why? If you tell someone about blockchain, someone is confused. So what is this blockchain? And someone is thinking, what is this cryptocurrency? What makes it different from me putting my money in a bank account somewhere? And this person is thinking, this is a pyramid scheme. You understand? So there's this whole thing where if one person does not trust it, and the same thing we're talking about, the positive of using FinTech and how it's gone well, because people are able to use it, they're able to see it, they have accustomed to it, they have, you know, it's all inclusive, because with FinTech, you find in Kenya, you don't need even a smartphone, even with your normal phone. You can do that. So there's this whole inclusion. But now with the cryptocurrencies, the difficulties, I think, that are being brought in by this whole cryptocurrency related, let me say, discussions, is that many people are not aware of it. Has the government done anything to educate the public about this? No. So what happens? People will, if one person comes up with a theory that it's a pyramid scheme, it will spread. Like oral traditions, word of mouth, from one person to another, from another person to another. And you find that these whole narratives makes it difficult for people to trust it. And then let's talk about the legal structure, okay? Are there regulations on how to use cryptocurrencies? Are the public ensured and guaranteed of their safety in trading into these cryptocurrencies? We still lack in terms of a legal structure to govern this. If you think even about the FinTech arena and how it came to be developed, the laws had to be developed around it, you know? They had to be clear that this is not this is not a banking system. Why? Because if it was a banking system, they'll have to be registered with the Central Bank of Kenya. But now they put it out that the money will be held by a third party who is now the bank, who is a trustee. So for them, they're just facilitating the movement. So that cleared out the framework. But if you think about it, services, okay, from the telecom, and feel like this operates like a bank. But if you think about it, if the laws and regulations were so harsh, then we would not have this whole fintech agenda or even this fintech discussion that we're talking about now. Why? Because the laws were so accommodative and they were willing to grow with the growth of this fintech. It's the same thing with the cryptocurrencies. The more it's accommodated, the more it's assimilated, and the more the people give it time to grow and to show us, its weaknesses and its strengths, the more we are going to adapt to it and the more it's going to be accepted. But right now we lack the knowledge. People don't understand the basics, like the blockchain and how it operates. Like, you're able to track every transaction like a public ledger. How in the US, like if you buy land, you're able to see it on a public ledger. So with the cryptocurrencies, it's the same thing. When you trade the cryptocurrencies, you're able to see if you buy, it's able to be updated. And people are not aware that it's not just one machine that does that. Many different machines will be working at the same time to try and generate the new Bitcoins or the new cryptocurrencies. They don't understand this technology behind it. And this is why there's a lot of mistrust regarding it. At the same time,
sorry to cut you off. That brings me to a third question that I'd like to ask in regards to now the aspect of trust. So most of the times you find that when something new comes in, traditional systems are always outed, so to say. So if you find a situation whereby people are having this issue of trust, it has to stem from somewhere. So does fintech have any implications on traditional businesses, even on traditional banking systems that we have currently? That you've said, because you've shown me a lot of positivities that come with fintechs, the issue of cost benefits, the issues of building SMEs, and the issue of employment as well. But then now comes the situation, what about the people who do the traditional banking systems, the ones who have to rely on people going to the banks to get their loans approved, for instance, and you actually acquire those loans. So does fintech come with maybe negative implications for traditional systems especially?
Okay. From this perspective, we would want to look at the traditional system versus the new systems. What fintech has done, and I'm so grateful for it, probably I sound like a person who likes changing things all of a sudden, is fintech has revolutionized the way we do banking. Why? Because it's made the traditional bankers or the traditional mechanisms realize that they need to change their systems. Not everybody wants to go and queue by the lines, okay? There are those who want to do that, but there should be also this option for those people who want to be assimilated. Why? Because with businesses in the traditional banking, you need the new people to come and keep banking for you to expand, But now with the fintech, they tend to appeal more to the younger people. Okay, because they don't want to go through the old traditional ways of banking and getting their funds. They want things as quick as possible. So what you find is the old, let me call the old banks and the old financial institutes have revamped their infrastructure to accommodate this new move, let me call it new fintech revolution, so that they can also have a stake in winning the newcomers. And with this, somebody will look at it like, okay, so people will lose jobs, people will do this. But if you think about it, we are in a time where technology is the raw material. I'll call it the raw material of our age, okay? And if you do not update, you stand to be left behind. So you either adapt or you perish.
Sort of shape up or shape out. But now, where comes to now a different question that I wanted to ask, actually from, I'm an environmentalist in terms of what I studied. So now there was a whole issue coming around on Instagram and also other social medias about the carbon footprint that comes around with fintech, actually cryptocurrencies. So how do you actually explain this in a way that fintech and people actually going into now the issues of cryptocurrency, people investing into it? What are the implications of it actually in the environment in terms of carbon footprints that they leave behind?
Okay, so now this has become quite yes issue, because when you think about cryptocurrencies, you're thinking, oh, everything is digital, everything is online, we don't have to incur all this printing and all these things. But then this brings us to a topic I really love, which is called sustainable finance, okay? When you're looking at the funding and the many people that are investing into the cryptocurrencies, what kind of projects are they funding, okay? If you remember, there was just one tweet by Elon, and it was talking about, you know, how they will no longer trade cryptocurrencies because of their contribution to the carbon footprint, and the whole market stumbled. You know, before, when we're teaching, when you're talking about cryptocurrencies, you're talking about them not being volatile, you know, but then at this point, it exposed the volatility of the cryptocurrencies, okay? Why? Because everyone these days who's investing is looking into sustainable related businesses and sustainable investments, okay? This is why you have terms like impact investing coming in, being pushed by the JP Morgans and the like. Why? Because when you're looking at sustainable finance, you're looking to finance projects that do not contribute to the carbon emission, the greenhouse gas emissions. So many people who are trading in these tend to fund projects like in the coal sector and the likes, and you find that many people would have a reservation in using the cryptocurrencies. So this is a discussion that has to be looked at from an industry perspective. Who are the big shareholders in the cryptocurrencies, okay? What kind of projects do they fund? Do these projects contribute to the CO2 emissions? This is the perspective that you look at this whole cryptocurrency thing from. And then on the other side, I think I had also forgotten to talk about fintech fintech revolutionizing the payment structures. If you think about it, there are many remittances that are coming from abroad, coming to the countries where these fintech things are happening. And you find that many industries or companies that have come from abroad to invest into the countries have had to digitalize their payments, where you find when they're in Africa or in African countries, it's easier to do the transfers using the fintech technologies as compared to the banking system. That tells you something.
That
Probably
makes sense, because the aspect of sustainability has always been an issue. But now that comes to now another question that I've also I would like to ask, actually now from a financial sustainability aspect. So we have the issue of cross-border payments on digital platforms, and also now cryptocurrency, as you've mentioned, and we've realized that most of this come from industries abroad. So what are the implications for businesses in Africa and wealth creations when we have now such cross-border payments moving along?
So these are the implications. When you think about it, is that's quite a heavy one if I think about it. So
yeah,
I think
you find that often, you know, we thrive on new technologies, but we always forget at some point to also make it a bit local, because you find we're moving at the same pace as other people who are, as I said before, economically or even financially ahead of us. So how do we actually look at the fact that we are trying to get into fintech, which is a good thing, but then what are the implications for us as Africa and our wealth creations now in terms of our businesses as well? Because money is moving back and forth.
Yes, but this is the point. If I look at it from my experience, when I moved to Italy, if there's one thing I missed most was M-Pesa. And I keep telling everybody, it's so difficult for you to, how do I say? I found it difficult adapting to the payment systems here, because there's a lot of credit, there's a lot of, you know, just bank to bank. And for me, I'm used to my phone. my phone being my everything. It's easy, convenient. But here, even to open a bank account, I needed a residence permit, which will take like 5 months to get. So you can understand the setback that was there. So if I think about it, it makes us realize, first of all, the business implication. It makes us realize how easy it is to do business in Kenya. Not just Kenya, but in sub-Saharan Africa. Because now when you move here, you realize that it can be difficult for you to do this kind of things the way you used to do them. So you understand the convenience and how frugal innovation can make doing business within the continent easy. Why? Because now you can transfer money from Kenya to Tanzania without going to a bank or going through another, because there's the pay bill, you can do that. If you think about the replication strategy that even now they're moving into Ethiopia, for example, Safaricom, this will make it easy to do business with the guys in Ethiopia, the payments and everything. The currency is changed for you. Like there's the whole conversion. You don't have to think about that, you know? So it makes it easy for you because you just put in and everything goes through automatically. So there's this all is. But if you think about it from an international perspective, it makes you realize that you're contributing expertise and knowledge of fintech to the world in ways that before everyone was depending on technologies from the Western countries and all those things. But now here is our own bread and used at home. It has its success stories from home. So these people from here have to actually come home to study our systems. Think about it, the Facebook, the WhatsApp Pay. They had to come all the way to Kenya to study these systems and how they operate. So what does that tell you? It tells you that technology-wise, if we open up innovation hubs, we open up techno cities, we are able to harness on this technology and know-how. Why? Because it's coming from a need perspective. You know, when people are, let me say, when you suffer a lot, you feel the need for innovation. So that's what we did. We had some problems. This is why I say, for example, when someone asks me about foreign aid and everything coming to Africa, I say you need to solve African problem from an African perspective, not from a European perspective or something like that. So this is what the technology did for us, okay? We solved our problems of financial inclusion from our perspective. The banks were failing. Why? Because they didn't have the financial muscle to open all those many branches, okay? But now here we had a small SIM card, a phone, and we brought out an amazing system out of it. Yes, there was a lot of investment from the Vodafone and everything, but then you see this innovation ecosystem has brought up people to understand, oh, we can have something bred from our own. So if you think about this whole scenario, what we have contributed to the international community is to make them understand like, yo, we are here and we're here to stay. If you come to Africa, you have to do as Africans do. You have to use our digital payments because they work efficiently in our environment. And if you also want to collaborate with us, you have to promote our systems. This is why you find the collaborations with Western Union, MoneyGrams, I don't know, GPay, I see so many things. So there's this whole interconnection and making them understand that these systems can also collaborate together with their systems. So there's this whole thing of promoting an idea and building upon it and growing it. So it's made the world know that, yo, watch out for sub-Saharan Africa. We are bringing up things and here they are. And this is why, if you think about the amount of money that's coming in to startups in the fintech ecosystem, it's a lot. And most of them are coming in terms of impact investment in financial services related things. I don't know if I've answered your question.
Yes, you quite have. And now that brings an issue that most of the times we suffer from as Africans. So you find China tested its digital currency, Federal Reserve, European Central Bank, the Bank of England, same suit. But then now we don't really have that. So what is this something that you think African banks, actually the central banks, should look into? Considering the fact that, as you've said, we are growing, especially in terms of our fintechs, the issue of Safaricom also growing. So do you think we should also test our digital currency as well?
Okay, now this is the thing. digital, I've seen, like, for example, Carrefour in Kenya, when I was there, they accept digital currencies. You can pay using the cryptos, but now you find there's fear. This is what I'm talking about. There's this whole thing about cyber crimes, okay? You're also looking at probably strengthening the let me call it, the compliance practices that surround it. And you're also looking at risk management as well as the acceptance. You see, for you to win favor and get accepted the same way the fintechs have been accepted, the digital payments have been accepted with regards to M-Pesa, you need to woo the masses. Think of it. What is the strategy for these cryptocurrencies? We fail to have a figure that's encouraging people to trust this. And we do not have that culture of encouraging these kind of things, because everyone who's thinking about it, they're thinking, oh, with the cryptocurrencies, I don't have a mobile phone to control it. I don't have a SIM card. The thing is, I don't have an agent that I can run to in case of a problem. I don't have, let me call it, a customer care number that I call to when things don't work. So when you put all these things, everyone is thinking this is a risky business. Nobody wants to risk, you know? And if you think about this whole perspective from a risk perspective, people think of it as a high risk thing to venture into, and this is why probably it deters people. But if you think, if I remember some time back then in 2018, I think PwC, 2015, 2018, I think, there was a time I had seen a publication saying that PwC was going to accept cryptocurrencies as payments. I've not followed up on what really happened there, but if you see many big companies that are accepting these cryptocurrencies as payments might act as, let me call them the Moses of this journey into cryptocurrencies, because they will inspire confidence in the people. But if you think of the small businesses, they are not in a position to mitigate the risk. But the big companies, they can afford to do this risk. They can afford to take the risk because they can cover it up in some way from one of their business skills, you know, from one of their business, let me say, from their business products. In case they incur a loss, it's easy to recover. But for the smaller businesses, it's gonna take time. So they need to be a lot of training, let me say, with regards to it, how to do it right. However, I have been seeing so many forums coming up and so many people starting their online training sessions. I see people joining the sessions on training how to trade the cryptocurrencies from like someone who's trading it on behalf of a company that trades cryptocurrencies and then training other people to trade it. And then there's all that thing that's going on. But it takes someone who has a good, let me say, financial background skill to understand how this works and to understand also the risks with it. Because the few friends that I've had who've traded cryptos, the time it peaked, they sold them, you know, because they were like, oh, I don't know how it's gonna work. They still think of it as if it's trading stocks and shares. Yeah.
And I think that's the main issue, capacity building in terms of finance, especially for the general public. So that we can be able to know moving forward, you're making an informed decision, especially when getting into fintech. But now you mentioned something that was actually a concern for me. You talked about aspect of cybercrimes. So what are the implications of now fintech, middle and long-term transfer of money? So issues of now illegal activities, because if you see there's a leeway, especially with Safaricom, M-Pesa and M-Shwari, you find now fraud. Most people take M-Shwari loans, disappear with it. You find a situation whereby some people register their lines with maybe fake IDs, and then they're able to get away with, maybe they finance crimes, kidnapping, ransoms, issues like that. So now, what are the implications of now going into fintech, especially in terms of illegal activities? Now the aspect of security and privacy, for instance, and also the safety of people's money also. Because you find sometimes people get hacked as well, systems get hacked. And being into the technological aspect of finance, that's a very risky business. So what are the implications, long-term especially, and also a bit of middle-term, and how do we actually go around the same issues?
Okay, so a lot to do with fintech and cryptocurrencies has to do with licensing, okay? And also investors investing a lot. I think that there has to be a lot of money that has to be invested in terms of capacity building and training to get a skilled talent, okay? And other than that, there has to be regulatory support, okay? So that you can, let me say, fast track the scaling of the fintech related products, okay? So with this comes the whole thing of structuring the legal structure. We have to develop a legal structure to govern this industry per se. And there has to be rewards and punishments equally, okay? And at the same time, there has to be research and development where you anticipate an issue and you mitigate it before it even happens, okay? Because you cannot go in blindly into all these things. Yes, we want acceptance. We want to join the digital transformation with regards to fintech, and the technologies related around it, as well as cryptocurrencies, but we cannot go into it blindly. For a government to say that they are accepting cryptos, it means they have a proper legal framework that governs it, and the welfare of the people is put first, okay? It's not profit first, okay? And this is why you find in the scenario with COVID, we ended up having the money transfers being made, like being reduced or being removed. Why? Because the government has a hold of this. The whole point is to make sure we do not monopolize these things. Because the moment it's monopolized, it makes it difficult for any intervention to come in. So this will be my take on this. If we monopolize the industry, we need to have a legal framework that accommodates all these things. And in as much as we're talking about rewards and punishments, we also have to think about CSR related activities coming from these companies that are using these platforms. For example, if you look at the Safaricom Academy, I've seen them doing a good thing. And this is a way to give back to society, because it's the consumer of the product that's making it possible for you to make money in these places. So if you can't make these places better, then how are we supposed to trust the product and its willingness to just bring humanity into the whole business perspective, you know? I see the several questions. Can you?
Yeah, actually, I wanted to now be able to go into now the two questions I've been be able to see on the chat box. So
Yeah.
the one actually goes with one question I also had in relation to what you just discussed right now. Last month we had a discussion on incentives and government regulations, and at some point you mentioned issues of rewards and punishments, and the issue of also government or regulations at some point. So, which comes also to what Evans has asked. Do you think we need more government laws and regulations into the fintech industry, despite the fact that it has showed results to people?
So my take will be, if we have now, let me call it, if we have an overlap between what the government thinks and what the specific companies think, it could bring difficulties, okay? So we need to probably include something to do with regulatory on non-compliance, you know, things to do with data privacy and cyber security mismanagement, and then probably something to do with intellectual property blunders related things, and also to understand the funding mistakes that happen. You know, if you look at fintech, you just see disruption, okay? It's a disruptive thing. It's just come and disrupted the normal way we do things. So the whole thing is transformative to the highly regulated financial services industry. And if you think about it, the market is growing, you know, so much, and it might become crowded. So when you think about it, you have to think about navigating the whole myriad of the relevant regulatory requirements that can be daunting to the whole emerging market. So when you think about the fintech entrepreneurs, they should always like have, let me call it, they should have an exhaustive review to their businesses, to the business plans that they have, so that they can they can plan against probably the different applicable regulations that might come as a result. This is why I'm talking about research and development and foreseeing things and trying to conduct them in a proactive way, you know. And then at the same time, if you think about this whole arena and the whole fintech ecosystem, we might have difficulties in the future, in the sense that if we do not study the systems now, we might build a whole industry which is unregulated, and by the time we're trying to bring regulations into it, it becomes very difficult to regulate, so it becomes chaotic. So the whole thing of having these regulations being brought in and governing the whole system is to just ensure there's law and order. Like, not everyone who starts up a fintech today is allowed into the market, you know? Everyone has to be regulated. There has to be requirements that have to be met. If you're going to be given data from people, from one company, don't share them with the other. Why? Because there has to be the privacy thing that people have to sign into it. In case of loss of money, what happens?
So, which means at the same time, I'm hoping, from also the discussions I've had, that we've been able to also regulate how much the government can also get involved in the same, since
Yes.
you can find the laws can be able to actually ensure that privacy is upheld, and also at the same time it can also destroy the entire fintech if not well looked
Exactly.
into. So I think that goes into the balance aspect of government involvement in fintech. And I hope, Evans, your question was answered. So I have one more question from Woki, and anyone who has any question, please feel free to also post it on the chat box or on the Q&A aspect of the meeting. So this is from Woki. He asks, how do we make digital banking, fintech, especially on blockchain, a reality for the African continent?
I think I bring it down to capacity building and training and empowering people to believe in the whole system. And from that, it has to be done from a practical perspective, because seeing is believing for the African people. Remember, most of us are also not used to the whole credit system, okay? So if you come to someone and give them a card, they'll be like, oh, this card, I'm just using money. But they do not understand the repayment structure. So before you introduce that, you need to educate them on this whole thing. So it's the same thing with the cryptocurrencies. Bring it into the education system, add it into the syllabus. For example, the people who are studying finance, they're studying all these things, they need to be brought in, because like for me, when I was doing my studies here, it was introduced as emerging issues in the financial world. So that's how I got to understand the whole scenario, but from an example perspective, bringing in companies and people who are actually using them to show how the system works, and to show them that it's possible to use the cryptocurrencies. And at the same time, the market needs to open up, you know, to the cryptocurrencies. Yes, there will be some difficulties, given that it's not it's not an easy thing to navigate around, but there needs to be a way it's explained to people how to use it. Just as simple like M-Pesa, how you just know it's a button, yes, no, this and that. It has to be made, it has to be simplified, because also the knowledge and the knowledge behind it, or the knowledge that's surrounding it is very little, that people don't really understand it, but it's also a complex things on its own. So it needs to be simplified. So I think probably skill set. We need people who have done this, people who've seen it work, coming in and teaching the people about it. And there's something you had also talked about, I think I left it out. I need to explain, when you're talking about hacking and everything, that there's no company that's immune to hacking. This is the first thing that you just need to understand. So if you think about it, cyber crimes will never end, let me say so. But you need to mitigate, you need to look for ways to stop them before they happen. So anticipate it and build a structure to block it, and keep improving your mechanisms as you go on.
So that brings me to my final question from my end. So what are we to watch out for, actually in 2021, in regards to investments around digital currencies and the fintech industry especially? So now what trends are we to watch out for? And if possible, please recommend a book or a podcast or any material that you can actually be able to read or look into, to also, like, for the audience and anyone else who's interested beyond this session, that they can be able to also have that aspect of capacity building that you've been mentioning throughout.
Okay, so I think generally I will talk about things we need to watch out for is basically the regulation of the industry, okay? Because you've had so many credit facilities coming up and building their system around the fintech, okay? So we need to watch out for the regulations because they might become harder for new entries. And at the same time, we need to look out for already existing fintechs that risk closure because they do not comply with the laws. So that's something we need to look out for. Secondly, we need probably to look at the changing mentality of people with regards to adaptation of fintech and fintech, cryptocurrencies, fintech, and anything related to adoption of these digital transformation technologies. If people see a need in some, will gravitate towards them. If they see no need for something, they will gravitate towards something that has been upgraded from the old one, or they'll completely switch off from it. So there needs to be a lot to do, like we need to look out for research and development within those fintech companies, because a small product like this could influence a whole migration to something else, you know? Something else we also need to look at is probably the products that are being sold in form of fintech. You know, you have agri-tech, other specialized fintechs like agri-tech. You have something to do probably with, agri-tech, probably insure-tech. You have all those other specialized fintech services that are being offered. You also have to look at their ability to incorporate already existing systems into the day-to-day use. Why? Because this is what will define what stays and what dies off with time. Because if they are able to adapt with the changing tastes and preferences of people, then they will stay, they will have longevity. If not, they will die off. It will just be a bubble for a few years and then forget and move on. And also, we also need to look at now the education system in terms of bringing in contemporary issues surrounding tech-related startups and those kind of things into the syllabus, because these are the people who will grow up using these systems. So if you do not inform them and groom them now, it means you will have difficulty. They are the people who might discard these technologies later on and develop a completely new system, or they might be the people who help improve the systems. And lastly, we need to look at probably the government regulations with regards to one country to another. In Kenya, you find a more open market. Probably in South Africa, you find a more regulated market. So how will it be the ease of doing business from one market where these currencies and these fintechs are not highly regulated to another geographical setting where there's more regulation into it? So these are some of the things that need to be reconciled. And also probably looking at the general global trends with regards to fintech, because the kind of fintech we're talking about in sub-Saharan Africa is different from the one being spoken about in Europe and the likes. So in Europe, you don't really need the M-Pesas and the likes because the banking system are well developed. But in Kenya, you find, it's a different scenario. So these are, I think, some of the key points that you need to look at. And also data and compliancy. Yes, that's something else.
You've forgotten to tell us, to recommend something for us to read beyond this.
Yeah. So I think mostly I would recommend that you read FinTech reports related. Let me check on my email. I had written a few things.
So meanwhile, I would like to open this in case of, before we close, anyone who has a burning question that maybe we should address, you feel like maybe we're leaving it out of it, or you've not understood an aspect, feel free to push it in the chat box and we will be able to address it, because we have like the next 2 minutes before we finish up.
One moment. So actually the first one that I'm going to talk about is industries of the future. This one, I really loved it because it gave us a global perspective of the changing industries, you know, from different continents. So that will be the one I would recommend, by Alec Ross. It's a 2016 book, but I don't know if it has a newer edition. It gives you scenarios on how fintech has been used to help families, more so in the Congo and the like, so where they were using it for, let me say, for transfer of money and to keep in touch with their families upon displacement. So I felt like they gave a good general overview of where Africa is and those kind of things. There's also a book but that book is in Italian. Let me look for an English one. There's I think Ravi is saying it's called Industries of the Future by Alec Ross. It was done in 2016, if I'm not wrong. Probably someone can confirm. I read it, I think two years ago. And then there's also a book by someone called Stephen Brown something. It's on the innovation ultimatum. So basically, it just guides you through the technologies that will be used to reshape the new decade. It also looks at artificial intelligence and those kind of things, and blockchain, as well as Internet of the Things. These two books, Alec Ross and the Innovation Ultimatum, they address Internet of the Things and blockchain. So you're able to get proper insight into it. And then there is also Banking Everywhere and Banking Everywhere. It's a book by Brett King. I can't really remember. I hadn't anticipated you would ask this. So that's another book because it looks at tech and innovation, technology and innovation, tech and innovative fintechs basically, and how they've changed the whole banking scenario. So that will be a good book also to look at. And maybe digital payments. There's a book called Digital Payments. I can't remember by who. Let me see if I can get someone. Is Pavlo, Pavio Sidelov. It's basically, it's just a book that a person who's studying finance can use. It's digital payment. It just compels and guides you through the whole digital payments. Like, it brings you into the world of digital payments. So Pavlo Sidelov, I don't know if I'm pronouncing it right. Those are the main books I would recommend. If I find more, probably I could share with you. But those are the ones that I really liked when I was studying back then. And they've really been useful to me understanding the global perspective of this.
Thank you so much for the recommendations. I have jotted them down, and feel free to also add more, which will be shared through our emails to the various participants who are here. Do not worry, Ms. Ravi will be able to put them down and we'll send them through your email. So thank you very much, Paris, for taking your time.
Before we go,
Yeah.
sorry, there's the question I've seen from Evans about wanting more laws and regulations. Yes, I do think we need more laws and regulations in the fintech. As I said, you don't want it to go overboard, and you don't want it to, it's already disruptive at its initial stages. So you can imagine how the future will be like without regulation. So yes, I think the regulations are important. Yeah.
Also a question which I think I have answered, where someone was asking about the aspect of unemployment in terms of fintech being the root cause of unemployment, which I believe we discussed during the session on how it creates new opportunities. The only difference is now people have to have capacity building for this new trends to be able to adapt to the new trends. So it's not really taking away the job opportunities, but rather creating newer
It's
ones
creating
and
new
more,
ones.
yeah, and more
So,
improvised ones. So
yes.
I hope I am not cutting you off, Paris, from anything else, from any comment.
No. In case anyone wants to continue the discussion, I normally have my LinkedIn on, so Paris Francis, in case you need to discuss more. And I tend to share insights. If I see things that are happening within the industry, I try to share. And the other thing you also need to look at the Zoom Pay. You've seen the Zoom Pay that's coming to bring in a bit of some competition to M-Pesa. These are things I'm talking about. It creates new job opportunities, like new ideas. You start copying another idea and improving it. So entries, all these things. So we need to. Anything else? No, I think.
So yes, we will. Any other questions? I think we'll send maybe to emails and maybe get them answered as well. I have sent in your LinkedIn and so that you can be able to also follow the same while then you have any inquiries as well. So thank you very much, Paris, for taking your time. All the way across the seas, you've been able to actually talk to us and inspire us in terms of fintech and also take away a bit of anxiety concerning the same and investing in the same, especially for young people, because this is now what we need to embrace. But there's also the fear concerning what we've always been used to and versus what we are afraid of as well. So thank you very much. And I think going forward, we are a bit more informed on fintech and we're a bit uh, ready to embrace it and also look into now localized ways of us promoting fintech in Africa, especially. So I'd like to thank you. I'd also like to thank our audience today for taking your time to actually attend this session and being as proactive as you've been. The chat box has been very, very full today. So thank you so much. And I hope that you all have a good evening and go and invest all that you've had today and also share with anyone. A live video has been posted on our social medias. So that's Facebook, that's Liberty Sparks. Please ensure that you can also share the same in case any of your friends have missed this session or you missed some aspects of it. So don't forget to also follow on our social medias. That's Liberty Sparks on Instagram, Liberty Sparks on Twitter, as well as Liberty Sparks on Facebook. So I hope this marks the end of us discussing this, Paris. If we see the questions are a bit too much, we may call you back. So thank you so much, everyone, and have a great, great evening.